Should be in a second. Control. Boom. I think so. Oh, yeah. All right. Okay, reposted.
Cool.
Sweet. All right. Good evening, everyone. Thank you. We got a bunch of new people here tonight. Thank you very much for coming through. Welcome to Decontrol or Decentral. This is where we host ETH Van every Thursday night. Some Thursdays we miss, but we're pretty diligent about it. We're pretty good about it. So, yeah, this is our really rad space that we've had for like over a decade, and unfortunately are going to be losing it within the next few weeks. But we're going to a new place. We're going to have a cool, exciting spot coming up next. So, but yeah, I'm glad you guys were able to see this spot before it's gone. This is it's pretty iconic and pretty legendary. So yeah, I guess what's cool about this is it allows us to go above ground, and we're gonna have windows. So we're pretty excited about that. So yeah, just kind of ironing out some last details on that. And we've got for everybody here and everybody that's at home listening to this. Hi everyone at home. We've got a small form that we've got created, a Google form, right? I think we've got it, and it's circulating. We're going to put that out soon enough. We're going to start circulating that just to get some feedback from people to see, hey, if we are going to offer something at this new space, such as like an office or a hot desk or maybe a dedicated desk, or maybe you just want to be a member that can come and hang out and lay on a beanbag, we want to hear from you. We want to know what that looks like so that we can get feedback from people as we move into this next membership or next space, which we're going to have some membership because it's like literally going to cost 4 times as much as this place, so that we can exist in Vancouver. But as compared to where we are now, where it's, maybe not as great of a place to come and co-work, for example, maybe it's
a bit cold in the winter.
It's a bit cold in the winter, but if we can, offer something that's a little more bright, a little more enticing, and maybe an environment that's cool to work around and be around. And even just people to hang out, right? Because it's, it's cool to be around other like-minded individuals, and particularly in this industry where we are kind of a niche little group. As much as we like to think we're big and huge and everything's awesome, we're tiny in comparison to, every other tech group out there in respect to that. So, yeah, that's kind of the latest on that. We may have a small extension of this space till the end of April, still pending on that, which we're kind of hoping because it helps us just with our transition moving forward. And yeah, we'll see with I guess things are kind of touch and go with events as we are kind of finishing up here with, I think we've got poetry nights on Mondays, jam night. Are you still doing a jam night this week? What week? If there's interest, Andrew hosts a jam night on Tuesdays, or every other Tuesday, I think. And then, we've got this. We're going to try and keep these cooking for every Thursday. And I think we've got which day is the Friday, the 27th of March. We're going to be hosting a larger happy hour, and that's going to be over at Global Relay. So that'll be right across from the Steam Clock. If you know where the Steam Clock is, and you go kitty corner, that's Global Relay, and you can see it right on the corner. You can see the event happening inside of there. So you can just find, you're at the right place. So just come in the side door there. There'll be a few drinks, some snacks, I think we're going to talk about founders and stuff that week. Vancouver founders. So we might do, I think that one's going to be separate. So we'll have Thursdays. We're trying to do as many things as we can here. We may not. We might wind some things down for like the last Friday or Thursday of March and through April. We might just not have events here because we've got a lot on the go with the move. So we'll keep everybody posted. So April is probably going to be a little bit of a slower month. That's for sure. Just because we're going to be in transit or getting set up or whatever it is. So,
or holding talks at the library.
Maybe we're going to hold talks at the library. Yeah, that might be nice. All right. Well, so how did you guys find this place? Or how did you hear about it? Meetup.com. Just searching Ethereum. Searching what is open today. Okay. Do you want to tell us a little bit? What's your crypto experience or your blockchain? Use the mic. Tell everybody.
Like a complete beginner, I would say. So I'm just like I'm a software student. But
Yeah.
I'm trying to like learn more, and I think like crypto is such a kind of niche group. It's really hard to break into. I thought it would be like interesting to come and like listen to this event.
Okay. Cool. So tonight we're just going to have a panel. Normally we have a few more people that are available so that we can talk about all the crazy things that are happening within crypto and blockchain, Bitcoin, everything today or within the past week. But we might want to, if you're new and curious, if you have any questions, we'd be happy to answer that or help you kind of like understand some stuff. That might be good for people at home too that are kind of beginners or new or early on. And this is just your first time here too or no? Your first time. Okay. Just moved to Vancouver. Okay. Well, let's maybe if you've got questions, have you been into crypto a bit or? Okay. Okay. Still newbie. Okay. Well, maybe let's start with that. Have you got any questions or some things that you're like, hey, what the heck is going on here? How does this work? Or why is this way?
Like I feel like my questions are like I have so many questions I don't even know what to ask. If that makes sense.
Just
like,
pick one.
I'm
Pick
like
one.
complete beginner.
It's okay. Just pick one. Let's start with something, and then maybe we can help unpack it for you. Or do you have a wallet? Do you have
Like Coinbase.
You have Coinbase. Okay, perfect. Let's start there.
Okay.
So you have Coinbase,
Yeah.
right?
Yeah.
And do you understand what Coinbase is? Do you know what that is? What it's doing? Like you're sending money there so that you can buy crypto, right? So this is a centralized exchange. This is what we call a centralized exchange. So it's a fiat or a dollar on ramp to then buy crypto is what you're doing, right? But what's happening is you're sending that to a custodian. So they're kind of like a bank is the way to think about it. So you send the bank some money, or like a stockbroker is really the better way to think about it. You've sent your stockbroker some money. You've now bought some asset. I bought some crypto. I've got it. I've got some ETH or some Bitcoin, or I've got some, whatever it is. But they still hold it. They are still in control of it, and you do not have custody of it. And so it looks like it's in your balance, and that's great, until it's not. Until you may have heard of this like latest centralized exchange that blew up called FTX. Remember hearing about this? No? Okay. All right. That's no problem. There's been countless centralized exchanges that have just blown up or have lost customer funds or have basically, they're basically, you no longer have your money is what it comes down to, or your value or whatever your assets or anything like that. And so this is where the whole point of kind of blockchain and crypto and even all the way back to like the roots of Bitcoin was the idea that you could actually take custody of your assets so that you can literally control the dollar, like the dollar, well, not dollars in right now, but like you can literally, well, I guess if you're using USDC, sure, it's dollars, but like you're controlling these assets under your sovereignty. So you're not requiring a bank. You don't have, it's like when you tap your card, for example, when you go tap your card or your phone to make a payment, you're asking the bank permission if you can use your money or if the credit card that you're using, you can allow them to make the payment. You're always asking permission. With something like Bitcoin, Ethereum, you're not asking anyone's permission. You're saying, I am sending from this address to that address. And so this is where this whole idea of custody is kind of crazy when we're giving it to somebody else and then hoping that they're doing it, because we're just going back to creating the old systems. So when you hold your assets on a centralized exchange, I basically tell people they're not yours. You have no crypto. Somebody else has it. And until you withdraw those funds to a wallet that's, even if it's on your phone, is a hot wallet, which I'm not crazy about, and there's a whole better way to handle your crypto, but at least if it's there, you're in control of it, and you are the person who can actually send it to whoever else you want, and you don't have to ask permission.
Like money going to Wealth Simple, like Wealth Simple your money.
Yeah.
It's like this.
Exactly. That's the way to think about it. So Wealth Simple has your money. You've now bought whatever stocks that you want. And you think, hey, I've got these stocks. We don't really have them. They're not really yours, because they could just say, sorry, we have now terminated your account. We are no longer going to have you as a customer. and we're going to liquidate all your assets, and maybe we'll send you your money back. Or you're going to have to prove to us that it's really you, or that you're not a terrorist, or some kind of, they can come up with any number of excuses to withhold your funds as well, right?
Thing with like
Yeah, that's kind of
Yeah.
a good way of putting it. Yeah.
Yeah.
And the bank can say no. Yeah.
Could I ask you as well, like, other than crypto being a niche sector, is there anything that piqued your interest when looking into it, thinking about getting into it?
It really started when I was like the year, and people were building a lot of like Web3 projects. I don't know what it was, just like a whole like
Hold the mic up.
oh yeah. It's like a whole completely like different sector that I don't even know how it works in tech. I asked my friend because he was the one that was building the project. I asked him how it works, and I asked him to like explain it to me, but like I didn't understand.
Yeah.
Yeah.
Cool. Yeah, there's also like like censorship resistance, which Tangle kind of talked about, but that's also a core principle, is like you can build these Web3 apps and you can deploy them in ways that there's no taking it down, right? So like you could launch something on AWS and you have your database and everything, and then AWS goes down and you're kind of screwed. Or like AWS doesn't like what you're doing, so they can your app down. If you build your app in a decentralized way, you can just have that live there forever, which is kind of a cool thing as well. Yeah, like social media. Yeah, you have a question? Yeah.
Kind of like a follow-up, like on one thing that you said and you as well. So like you said when you were talking about hot wallets on like mobile hot wallet, you said that there's another or like better ways to actually have and control your crypto, but at the same time, you talked about like decentralized exchanges, and also we saw like yesterday or today like with Avi, what happened. So like what would be the station?
So today, for context, somebody took I can't remember what it was, a Aave derivative of ETH. They had some Ethereum, $50 million worth. On their phone, they swapped it using I think it was the Aave mobile app, and they got out, what was it, $30,000 worth of USDC. So they lost upwards of just about 50 mil. You don't want to be moving 50 million on your phone. It's just not very secure. And there are a lot of technical hurdles for people yet. So somebody coming in, like the average person making a bank transfer, like you might have a e-transfer limit here in Canada of like $5,000 a day. And like that can be helpful for some people because, if somebody tried to transfer more than that or whatever, there's guardrails in place. In crypto, you don't really have that, at least not for a majority of experiences. But there is tooling that's becoming better and better. So you can have like basically a confirmation, and you're watching this and you're seeing, okay, yes, this is going to go to this. But there's no like takebacks in crypto. So you do have to be very careful. And I think that is part of a mindset that somebody has to understand when getting into it. But again, if you're moving $50 million, you have to be really careful and understand what you're doing. Which, the industry needs to work on more for people to understand that. But alternative as well is using a hardware wallet, which it doesn't necessarily stop somebody from doing that, but it adds more security. So you have, on your phone, you can have your wallet, and it's just a string of text that's like a password that's saved on your phone. Now, your phone is connected to the internet, and let's say you lose access to an account and somebody gets in and is able to find your private key that's on your phone. Now now they have access to your entire account, right? With a hardware wallet, what happens is when you make a transaction, the data is sent to this offline device, signed there with the key that never leaves your device, and then it can be transmitted to the blockchain to do something. So now you don't necessarily have that risk of somebody coming in and finding your account password that's on your phone. But you still have the risk of signing a transaction that maybe you didn't want to, or you didn't realize, you didn't look through it carefully and you still signed it and you lost $50 million and that kind of thing. Yeah, I don't really know where we're getting there, but hopefully that answers a little bit and kind of gives some context.
Yeah, and like basically the hardware wallet acts as like a two-factor authentication. So think of it that way. That's like something that a lot of people are familiar with. Oh, I pull up my Google account, I type in the number, and then it, I'm able to access, I'm able to log in. So think of that like, oh, now I'm able to send the transaction because I've gone and used my two-factor authenticator. And that's basically what the hardware wallet is doing. Because if it's just a hot wallet, and like, I would say get off of a phone completely. Like, phone's fine for small things. Like if you're sending like, a couple $100 or something around, like, okay, just for testing and having some on your phone. But I personally consider that anything that is just a wallet that is directly connected to the internet, that means that somebody has some way they can figure out access that wallet on your behalf somehow. If you get hacked, if you get phished, if you get something in there, if that wallet is open and isn't cold storage protected by a hardware wallet, yeah, I mean, I'm fully expecting one day to open up my wallet, open up my phone, and just be like, okay, yeah, that wallet is empty. Yeah, that happened. It's a sad state, but that's kind of is just how I'm thinking about things. Simply because, because of the fact that like we connect to so many things, we install stuff we don't care about, we don't think about. If you're on a computer, you're doing this from a desktop. When you are with a hot wallet there, for example, now that is sitting in your computer, right? That's where your private key is sitting in your computer within the browser. And I've known several people who then click on some Zoom link. That was the latest thing, or one of these, well, not the latest, but like a lot of these things where people click on a Zoom link and then you're giving people access to your computer, and it's some person that was telling, oh, we need to join this call and you need to click on this or whatever. So when you click on this and you give them permission and access, well, then they just have a script that runs and just like, oh, I've given access to my computer, boom, goes in, extracts your private key, drains your wallet, says, oh, yep, actually the call is completed. Thank you very much. Done deal. So you need to really take security into account here, because yes, it's great that we have sovereignty, but now you are in charge of your own security, because the bank isn't going to give you, there's no bank to like, oh, I can get a chargeback or I can get a return or a refund. Something to keep in mind too is that the whole tech space is evolving towards this kind of method, right? You have now two-factor authentication of an app that these codes to two-factor, right? And people are starting to, like, you have an Apple account. If you want to secure that, usually now you write down a phrase, then you keep it somewhere safe, that if you need to reactivate your account, you have this phrase. There's a lot of things that are shifting that are requiring people to think more in this mindset as well. Crypto has arguably some more risks because you're dealing with actually valuable, directly valuable things. But I think it is something that is creating a shift. Like, people are starting to think in this way as well. As an old back-end developer, maybe do you have any?
I was just thinking that what you guys said all sounds great, but this guy had $50 million on his iPhone.
Yeah. Oh yeah, no question. That's like also very
and notice how like it wasn't the iPhone that fucked him. It was user error.
This was a complete user error skill issue thing. And just to give a little more context on this for everyone, like, I haven't read into it too deep, but when I look at this kind of stuff, and maybe if you looked into it further, but like, basically, if you have any amount of value and if you're trying to swap into something else, and I'm guessing the pool was just illiquid, right? Had to have been. So it's if you have 1,000 units of something, but there's only 10 units worth of that value on the other side, you're only going to, if you're saying, I want to take it all, it's kind of like, I'm going all in, so I'm willing to give everything I have for everything that's in this other side. So it's like, I'm literally swapping.
So I would say a simple way to think about it is like, okay, I want to sell my US dollar to CAD, right? And I have 1,000 US dollars, and I'm expecting, I should get around 1,400 Canadian. But when I go and make that trade, I didn't set a safety rail to say, hey, I want a minimum of 1,400 Canadian. It was just like, oh yeah, I'm going to swap this to whoever's willing to buy it. And somebody came in and was like, oh yeah, I'll buy that for $50, the USD. And then I end up getting, $50 Canadian, because I didn't say, oh, I want minimum $1,400, that kind of thing.
I thought like Stanley, I read his Stanley's thing really quick there. He was saying, so Stanley's like the founder of Aave, and he was saying that they would have had to have clicked like, are you willing to accept this kind of slippage? Like usually there's like anything over 5 or 10% with slippage, and that's like the price disparity. They're like, yo, are you sure you want this? And now this is like 99% slippage, which is insane. Yeah, when you're doing this with 50 mil, there's something really weird going on here. Anyway.
Yeah.
Not sure. Was somebody said it was connected to Garrett or something?
I don't. Somebody said it was.
Not us.
Somebody said it was Garrett Bullish, which he's the one that like shorted a bunch on the 1010 or something, right? But I don't know if it actually was. I mean, there's a lot of people in crypto that just swing that around, so could be anybody, really. So oh yeah, okay, that's a good question. So where did the 50 million go, right? So there's this concept called MEV, minor extractable value. So people are watching for transactions that come in. And this person said, yeah, I want to sell this 50 million for USDC. Not saying how much USDC they wanted. Somebody that saw this transaction could basically find a match for it and take the rest. So they basically, found a simple match for it, and then they took the other 49 million. Yeah. So somebody had a really good day today. Somebody had a really bad day today.
So someone's Claude bot has $50 million now?
Somebody, it's more sophisticated than Claude bot. It was Titan Builders, but
Oh, yeah.
I don't know who was the actual block builder for that or proposer, but some bot.
Yeah, I heard Stanley was saying that too. He was
yeah.
gonna give back 600K, but that's, I mean, thanks. You know,
Yeah.
like, okay. Who's in the chat? Who was that? Okay. All right. But yeah, hardware wallets and like a Ledger or Trezor, those are kind of the two biggest names. Yeah, they're just don't set up like backup recovery. That's like giving access to a third party to say, oh, well, we'll give you, one key, and if we get the right amount of things, we can actually go in and recover your seed phrase. That just seems like kind of, it's like, well, it's like a safety deposit box kind of, but I don't know. That seems, I'm not a big fan of that.
There's also a lot of like smaller companies. I'm not sure what big names are doing this, but so normally when you have an Ethereum account or like a wallet, you just have this key, right? And this key it's just an account. Dumb. Yeah, I can send this, or I can request to send it. But because Ethereum is based on smart contracts, you can have like a smart wallet. So there are a lot of projects that are playing with this and getting pretty far to where you can have like actually enforceable transfer limits. So if I said, oh, I never want my wallet to be able to transfer more than $5,000 or whatever, you can set that and your wallet would not be able to transfer more than that. Something maybe more realistic would be like, hey, I only want to send to these addresses. Like, let's say I don't do much in crypto. I just buy on Coinbase and I send to my cold wallet or my hardware wallet. I don't really need much more than that. Then I could say like, hey, this Coinbase deposit address, this is the only address that this wallet can send to. And you would be able to enforce something like that, right? So there is like tooling like that becoming better. and it's maybe more a better UX for newcomers, so that you can have like a safer experience. But yeah,
You're still early, is where we're getting, and there's tons of development room. Like there's so much that needs to happen. We think we've got it, we've seen it all, and everything's still happening. Like after a decade of this, but it's like the UX experience is something left to be desired still in crypto. So lots of room for that to make it feel smooth and seamless, and not have janky stuff like this. Even like just did a multi-sig transaction with an associate here earlier, and just something new pops up, and it's, why is this complex? Why does this not obvious in how we're able to sign this, or where's these accounts at? Where are there's just so many things, so many little glitches, and because it's really complex stuff, it's not just like I'm gonna give you some Canadian. I just need to send you some Canadian dollars. Here you go. No, I actually need to swap it into something else, and I need to put it into this kind of vessel in order to make sure it gets to you. Well, I have to send it to you through MoneyGram or whatever, Money Mart or whatever it's called. Like that's where things get complicated, right? And then you need it as a some sort of traveler's check. Are those still around? Does traveler's check still exist?
probably. Yeah.
Let's hope so. Let's say so. But, yeah, the difference here is that you can always ask the bank to, oh, there was an error, and they can just click some buttons on a database sheet, on a spreadsheet, and fix it, right? Whereas in the real world here, there's no fix. There's no like go.
There's no go backs.
There's no take backs. There's no whoops. Wow, that's a whole other. Yeah, let's not get into forking. That's a whole other. Yeah, we have.
Yeah,
the main
wait, wasn't
chain.
there a rollback?
The rollback where? On Ethereum? No, there was
No,
a
it was a
state
long
change.
time
It
ago.
was a state change.
Yeah.
That was a state change. For the DAO hack, that was an irregular state change. It wasn't a rollback. I don't know that they went back in time. Wasn't it that we just reset? They just looked at that and they said, we're going to change state. We're just going to say what happened there is now here. Because all these assets were in the DAO. Anyways, we should actually watch. Maybe that's what we're going to do one of these nights. Is there's a new movie that was talking about, or like on Netflix that was talking about like the DAO hack and a bunch of this stuff. And one of our homies, Griff Green, he's in it. So, and he was like, there when it was happening, like when the DAO was getting hacked, and he was there helping try and recover funds from these smart contracts and trying to hack it from other people and bring it from the attacker. And anyways, lots of wild stuff there. So that may be one of these things that we do one night, is actually just watch that movie. That would be pretty rad. So yeah, that's a whole different thing. But okay, what else we got?
Trying to think here. I mean, we had some crazy with oil trading over the weekends now. Hyperliquid has equities markets, so you can trade perpetual futures on equities and commodities as well. And so, 2 weekends ago, I guess that wasn't this weekend, but both weekends. There's some crazy things going on with the war that caused oil prices to be extremely volatile. And people were able to trade that over the weekend, which they're not really able to do anywhere else. So we saw some crazy stuff. So the way that this over the weekend, in a dumbed down or like a simple way, at market close, the price of oil was the volume, and it can go up and down. Or people can trade these perps around this oil price, and the oil price cannot go above or below, I think it's 4% or something, close. And so you have people testing the limits of that and longing oil, and it went up to the max, and nobody could buy oil anymore, only sell it, which is crazy. Had the market open, and I believe it shot up further. or corrected a little bit and went up. But it was really cool. You could see like people trading this asset on the weekend and influencing the price at open in on Monday or Sunday night. So that was pretty cool. I mean, interesting to see. Yep, that was on Hyperliquid. Yeah,
It was on a blockchain.
a
not the-
blockchain. They have a bunch of different equities and commodities. There's also a project on there that's doing pre-IPO companies, so you can like buy OpenAI or SpaceX or whatever, which are a little bit. No,
You're saying
exactly.
pre-
They have not
pre-IPOs.
IPO'd. So it's pre-IPO. So you can trade these. It's a little janky, to be honest. It's like, oh, the pricing is a little up in the air on what it actually is, but people are trading these and kind of finding some price discovery. Yeah, exactly. It's a decentralized stock exchange. Now it's mainly perpetuals, which isn't like you're buying the stock itself. It's like you're, it's a type of derivative. I won't get too deep into it, but it's a very simple mechanism, and it trades around this index price. Yeah. Yeah.
Yeah. Okay. Yeah. So kind of in parallel to that, I guess you call it kind of supply chain disruption in terms of like people wanting to purchase whatever form of kind of oil. I noticed at Vancouver, VBCE, Vancouver Bullion and Currency Exchange, which is like Granville and Broadway. There's one downtown. There's one in Metrotown. It's a big deal, and they don't have silver. Most of the silver they don't have in stock to sell to people.
Huh.
They only buy at this point, and there's alarm bells ringing a few weeks ago because the Perth Mint out of Australia, they didn't have any silver to sell to all the demand. You know,
Wow.
the demand going out there. So again, we have the illusion of free markets, but in
Mhm.
reality, it's just craziness. You know,
So,
it's the paper
Yeah.
market in terms of that. And again, the culprit in terms of that is J.P. Morgan, Jamie Dimon and company, who are now like completely intertwined with like the Federal Reserve and the U.S. Treasury and that sort of thing. So I mean, it's grand criminality on an unfathomable scale, basically. So we need a people's reset, not a Rothschild Rockefeller reset.
yeah. Yeah, it's interesting too. Trump likes
So
to do things on
Hyperliquid
weekends.
set it to be only 4%.
So it's not Hyperliquid. It's Trade XYZ, but they have these markets on the Hyperliquid blockchain. And I don't think it's exactly 4%. I can look it up.
But there's a limit.
And that's just set by them, right?
Yeah,
so
that's set
they
by
could
them.
have no limit, but then things get weird, right?
Yeah, so like let's say you have no limit and the market goes like crazy higher than open the next or when the market opens, and then some people get like instantly liquidated, right? So you have like you want some safety, but you want some like they want to try to have price discovery on a weekend. But there are some
But, like,
risks with just like having it completely disconnected from the market when it opens.
I guess because their volume is so small, right, compared to the market.
Yeah, so like I mean, yeah, it's smaller than the regular market.
Because
Last
otherwise they would be the market.
well, and it's
Where
not,
it's going.
and it is a derivative, right? So it's not actually the asset itself. But like last weekend, I think Sunday or Saturday, on Hyperliquid, the Bitcoin volume was 3.9 billion, and oil was 1.9. So it's like a lot of the market. Hyperliquid is a big exchange at this point, and they do a lot of the crypto volume. But yeah, just as a, I mean, that's probably, I don't know what the volume of Nasdaq or the CME was. Probably a lot more than 4 billion, but
But that is going to be interesting to see that grow.
yeah, for sure. Yeah, I think there are limitations that it's not like if it was a spot market, that would be pretty cool too. Because yeah, you can just trade that, and you don't have to have that sort of limitations. When it's a derivative market and you don't have an actual underlying trading price, then things get a little bit risky when you try and push the limits there. But yeah, I don't know. Maybe we'll see spot equities at some point too. That'd be pretty cool.
I mean, we see that with who is it, Ondo and X stocks. They're like the two big ones right now that are doing like actual stocks. I think.
Does Robinhood have 24/7 on? Because they have like, they talked about their tokenized equities last summer. If you could trade that too, that'd be cool.
Yeah, I don't know if it's 24/7. I don't really do much with Robinhood, but I did see that they listed you could long and short hype on Robinhood.
Yeah.
So you could just take the asset that is, basically the exchange that does all of this stuff, but we're going to take the asset, we're going to take it over to Robinhood in a custodial way instead of a decentralized way. We're going to use this custodial way to do probably a worse experience with it over on their platform, and some restrictions apply. So awesome. Yeah, sold. I'll take 2. Thanks. Anyway, yeah. Okay, what's Arcade? Assets are coming to, a little bit of a different spin-off here, but assets are coming to Bitcoin.
Give them the orange mic, eh?
Yeah, there's a lot going on in the Bitcoin layer 2 world. There's a new type of layer 2 called ARC, and it is how do I say this? An alternative to Lightning, possibly quite different, but designed to alleviate the problems or challenges people have with Lightning, which is like channel management. Mainly it's channel management. Yeah, so ARC is a family of new technologies. There's 2 competing implementations that are not compatible. In the Lightning world, we have multiple implementations of Lightning, but it's all compatible. In the ARC world, there's Arcade OS, which is more further along, and we actually accept Arcade OS at the Bepsi machine here. And there's also one called Bark by a company called Second. And they are focusing on being more the Bitcoin Maxi version of ARC, which means that it'll only ever support sats. So no tokens, no stable coins, no NFTs, no fun, no DeFi. Whereas the Arcade people are more like just full send, stable coins. Tether just invested in Arcade. So maybe it'll eventually get launched.
Maybe.
Well, Tether keeps investing in various Bitcoin companies and saying they're bringing stablecoins to Bitcoin, and then nothing ever happens. And this is, I think, the 4th one. And it's just kind of funny to see on X the people who aren't paying attention quite as much, and they're like, "Oh my God, Tether coming!" And it's like, did you miss the last 3 announcements? And never. Yeah. So long way around is we're trying to make Bitcoin exciting again. People are trying really hard to bring DeFi and stablecoins to Bitcoin in various ways.
Is there I saw I'm not very tapped into Bitcoin, but I saw a lot of people talking about like miners transitioning to AI.
Mm-hmm.
Is that a concern of the community, or like what's any thoughts on that?
I think everyone's moving to AI in general. Like even like it's kind of sucked the energy out of every room, I think, right? Like if this was an open claw meetup, we'd have a lineup out the door, right?
That's true.
So to your point, I don't think I know the OpenClaw meetup is tomorrow. Okay. Trying to thought there. Thanks, Justin. He's a red teamer to teach your
The AI.
AI energy. Yeah, the energy seems like the least of the problems to me because there's no minimum amount of energy required to keep the network going, right?
Right.
So even if you lost like 90% of the hash, the network keeps operating completely fine.
Doesn't it make it less
Easier to
secure though?
attack. It makes it easier to
Yeah.
attack. Yes.
There needs to be a certain threshold of economic security behind
Eh.
the value behind the asset. There needs to be, and I don't know what that equilibrium
Exactly.
looks like.
Nobody knows what that exactly.
Right, but if that drops, like so will the value of the asset because people won't feel as secure.
I don't think so.
Do we want to? We need a chart here to look up like
The hash
the
price.
hash price and versus
Yeah.
hash price, and I think those two are highly correlated. Yeah. Mhm.
Mhm. No.
No. So what when I was in Buenos Aires for Dev Connect in November. So this is like a few months ago, 4 or 5 months ago already. I was speaking with a miner they're in the US somewhere. I can't remember. I think it was out east in the eastern part of the US. And I started asking him about similar things. He says, okay, I'm seeing a lot of, AI stuff with, people needing like a lot of energy for AI. And like as a miner, I'm saying, is there anything happening there? He basically said, we are at a standpoint now where we are taking on contracts from AI companies where we don't need to run their infrastructure. All we need to do is give them our contracts for our energy. We have this much energy, and we are just going to give them some of that energy. And the cost difference, he said, was, quote, not even close for them to continue mining Bitcoin versus just accepting this offer to say, we will pay you X amount of dollars for X amount of energy and call it a day. And
No, electricity.
electricity, literally electricity. They have, however many units of electricity, and they're going to just let these people have X amount of these units of electricity. And that's going to pay them more than mining. So at a certain point, if AI keeps going and keeps growing and gets crazier than it even is now, exactly. So then what does that do to, the hash rate of Bitcoin? If you have these miners who have these large energy contracts, maybe more of them are going to be swayed, because at the end of the day, as a miner, it's about profitability. It's, obviously there's some people who are like, hey, I believe in, I'm here for the vision and I'll believe in it, and they'll run at a loss or run at a minimum. But when you've got this kind of dollar value sitting in front of you, and then they'll just go out and buy the Bitcoin separately and say, okay, instead of mining it, instead of me able to hit 1 block a day and get 3.125 Bitcoin, I'll just go buy 5 Bitcoin a day with these energy contracts. So it's like you're still money ahead.
But that's fine, right? Like, yeah. Oh, good.
Sure. Yeah. Yeah. And we're back at that. So
But remember, like the point of having hash power, the point of mining, is that as long as 51% is on the right team, it works.
correct. But
So if energy is so expensive and energy is so hard to come from, and all this energy is going to AI, where exactly is the attacker going to get all this energy from?
it's not about attack. It's about
No, it
ener-
is about attack though.
Also, the value of Bitcoin is not necessarily correlated to the
Hash
rate?
That's what I'm
right?
saying.
No, but what I'm saying is that at a certain point, if the hash rate drops too far, there isn't enough economic security.
Yeah.
So I know what you're
Says who,
saying.
though?
Yeah.
Well, it says me. But anyways.
But
no, I
like,
see your point though, because you're saying that
Yeah.
if
no
oh,
one's
we-
attacking you,
if nobody, but that's the thing is
Yeah.
at some point it now becomes more lucrative for this AI power and all these people that just have their miners that have just been turned off
Mhm.
to turn those things on and then attack the network. There is the ability to do that. So that's always this looming overhead.
Mhm.
where suddenly that becomes the more profitable thing to do. It's just like, remember when people were mining Bitcoin and Bitcoin Cash at the same time?
Yeah.
I think there was like fork.lol. That was a website that you could look at and see like which one was more profitable. And sometimes it was BCH was more profitable. So people would just flip over there, mine Bitcoin Cash. And then when it was more profitable on Bitcoin, they'd mine Bitcoin again. They don't care. They're just mining wherever the most valuable thing is. And at a certain point, it becomes more valuable to do X, Y, and Z. And whether it's attacking or if it's just literally economic security too, where it's like, well, the network doesn't need more security because the hash rate is this, therefore the dollar value is of Bitcoin is that. That's how we pay our bills, and everybody's just calling it a day. But if more economic security, more power, more people doing it, then it makes, you know, I do believe that those are correlated.
Well, the hard part of like security in all realms, like sometimes I like to use the example of like a prison for the security budget, right? Like you have a prison, and your security budget is how much you spend on fences and guards and monitors and stuff for that prison, right? Well, how do you know your budget for the prison is appropriate? Well, did anyone escape last year? No. Well, I guess it was enough. How do you know it's not too high? So maybe that perfect balance is every 5 years someone escapes. And like the other thing I would say is like it is scary as hell to think that like Bitcoin being 51% attacked, right? Like obviously that's concerning, but earlier this year Monero was 51% attacked for several weeks, like on and off. And the price of Monero is higher today than it was then. Because it's like, imagine you've got this like, the hanging over the price of the asset is we could be attacked, we could be attacked, we could be attacked, right? And then you get attacked and you survive. Now you're oh, it's like, oh, so that actually wasn't really that big of a thing to worry about. Like, oh, someone did 51% attack us, but it only lasted like 2 days and it wasn't profitable for them. And like, right?
But what if it's just like attention, where people are like, well, we don't care about Bitcoin anymore. We just care about it.
Well, that's the bigger problem, I think.
I think that's
the
yeah.
bigger problem. Yeah.
Because if there's miners are just like, well, we're just going to pack it up. We're done with this whole mining excursion. We're just on to AI. You know, thank you. This has been fun. And, you know, that whole backbone is gone, right? Or I should say all gone. But, you know.
Or like, what about just like people like myself, right? Or like the prospective developer we have here, right? Prospective developer A. He could get, what if he ends up in the AI, right? Like, and we just, yeah, that's a concern. That's much more of a concern to me than the hash. Just like the energy sucked out of the room.
Yeah.
Yeah, are you looking to go build on AI, or are you looking to build in crypto? What if you do both? What if you bring both together?
Well, when he goes to the AI meetup tomorrow and there's women there and there's there's snacks.
I think I go back to the kind of technocratic agenda, which was developed back in the 1930s. And you look at some of kind of this relative of Musk's, you know, I guess his father or whatever the case may be, or grandfather. So there were some alleged kind of social evolutionary people who were saying that the way forward is that it's via basically electricity being the currency, that people basically get allowances for how much electricity they're allowed to use. So it's kind of like power allotment by this kind of centralized authority. So yeah, exactly.
Or BC Hydro.
Yeah, I mean that's a perfect example in the whole terms of the whole carbon credits scam. And you kind of look in both cases, and there's so much smoke and mirrors and just so much deception behind the rhetoric by the people who are pushing that. And in so many cases, they create this really hyped narrative, or they stage certain events to give the perception that it's kind of like with David Icke, the problem, reaction, solution. So they kind of have the solution in mind beforehand. So they're manufacturing fake problems to get a huge reaction from people, which would then encourage the adoption of the solution, which was what they had wanted all along. So I'm finding a lot of that is happening in terms of these really deceptive people, the usual kind of gang just wanting to centralize all sorts of power. And just via via kind of on ramps to be able to use electricity, use all sorts of really neat, cool stuff, which we kind of take for granted in terms of having access now. But at the same time, these people with this crazy power lust are trying to get everybody else to follow their their ideal rules in terms of how to use that.
Right. And I guess AI probably plays a big part of this, of course. But then meanwhile, we're going to try and figure out how we can keep crypto alive with AI together.
Well,
Yeah.
we were talking, friends at Zelek. There's a new tool that they released, V12, and it's basically an AI auditing tool. I believe like OpenAI posted one as well, or Claude. I can't remember which of them. Yeah, for smart contracts. But one of the examples I saw earlier this week, they tweeted about it. A company used V12, and the cost, they had 804 lines of code and 4 issues, one of them high severity, $3.79. So they it looks like they do it by lines of code, so it was like half a cent per line of code and under $1 for an issue found.
So this is like a special service for smart contract auditing.
Yeah. So
It's
like
called V12. is it?
V12, yeah. And yeah, you like, I don't know. I found that really interesting because I like been vibe coding a bit recently, and I was like, hey, like I could actually do things in crypto and feel relatively safe putting out a contract that maybe like not a lot of money. You want your code very. I can feel a bit more comfortable, like building in crypto without having to think about, oh yeah, I would have to pay $50,000 to actually put it out there to get a good secure audit. But
Yeah, I think that is where we could, in a future here too, we talk about like better UI and UX. This is where having these kind of things, these kind of audit, like very quick audit solutions are just going to force every code that gets written and everything that gets deployed to just always be better.
Yeah.
Right? Even just now, or in the past where we've gone in the past 5 years, like smart contracts have just got better because like there's better libraries, there's better, tooling, and all this stuff is all built in. But now we're going to build that all right into a whole builder where it's like you might be typing in live real time and it's going to tell you this is actually going to be a fuck up.
Yeah, and it does go hand in hand. Claude or Anthropic partnered with Mozilla, and they recently released that Claude found 400 vulnerabilities in Firefox. And now a lot of those weren't necessarily like real not all of those were real vulnerabilities. But you still see, like, I find daily I'm seeing other companies hacked and vulnerabilities found with AI as well. So it does go hand in hand. But I think that when you have also very, like, smart contracts in general are a very definitive process, and you can write like a formal verification for that and have these ways that you want it to expect to behave, you can really get really good security there. And I don't know, it's maybe a philosophical kind of question of whether you can have something that's like fully secure or if something can always be exploited. But yeah, it becomes very interesting.
Someone's got an opinion.
Yeah.
I'm very interested in defect-free software.
Defect-free
and systems,
software.
yeah. And QA. I think I side with the people that it's not possible.
Not possible.
Yeah.
Okay. Interesting.
Because it's kind of it's indeterminate. Like, you don't know whether some part of the system will change in the future.
Yes. Yeah. If you have a changing software, let's say you have a non-upgradable smart contract that you deploy, though. You think you can make that fully secure?
No, not in all contexts, because something could happen, underneath it
Yeah.
There could
later
be an
on.
irregular state change.
Yeah, exactly.
Yeah.
Like
Or-
that,
or
that
yeah,
could
the-
change.
execution environment changes, and that could affect how the contract works, right?
Yeah, exactly.
One other thing.
Like you can't guarantee it, I guess. Right?
Yeah.
Like you don't know whether you're at that property because you've reduced it to like, I don't know, like 3 nines
Mhm.
of fractions of I don't know,
probability of
probability, yeah.
Mm.
And you just don't know where the other one is, so it's
Yeah.
it's one of those undecidability
attack. Yeah.
like in math.
P equals NP, right, or something like that.
I think I'm referring to Gödel,
Okay. Yeah.
incompleteness theorem, these kind of things.
Yeah.
Yeah.
One other thing that I was thinking about recently, I've heard a lot of talk about like with AI, how I mean teams are getting smaller. I think Jack Dorsey talked about this. He laid off, I think it was 40%, 4,000 employees of their company, and he did it in somewhat of a commendable way. And he said that like, hey, I don't want to do rounds of layoffs and that kind of thing. But these big companies are realizing that smaller teams are working faster because you don't need engineers for lines of code anymore. You need them for review and processing. And when you have a huge team that's reviewing and handing off to the next person and everything, it just slows down companies. And that's something that I thought was interesting because in crypto, you find all these small teams. And like these small teams are behind these big companies and applications that have high TVLs and all these things. So I found that kind of parallel interesting, and maybe crypto teams are kind of ahead in that sense. 9 people, yeah, okay. I didn't know. Huh. Wow. Yeah. You want to grab the mic, please?
Reddit has more than 9 employees.
No. It's like only 9 people run all of Reddit, and then the community sort of like self-regulates and self-balances itself out, and it's like all up to like the psycho mods and stuff like that.
Yeah, I guess that is a thing to consider too, is like moderators or maybe
Like an ad
part of that,
hocracy, you know?
But you're right. Like Tether famously has like the highest revenue per employee of
Yeah.
like any company, I think, as far as anyone knows.
Hyperliquid? Yeah.
Well,
Hyperliquid?
and you think like X, remember when Elon got rid of 80% of the company and
Yeah.
nothing broke?
I don't know if it's gotten much better,
Okay,
but
it hasn't gotten worse. Like,
Yeah.
economic security budget. Yeah. See, exactly. Yeah. And like what you said, people get in the way,
Yeah.
right? And like I think this has actually been known for a long. I remember hearing this story from Carl Icahn, who's an investor, and he said he bought a business and they had like 10 floors of an office building. And the real estate agent in the cafeteria was like, "Hey, if you ever want to get rid of some of these floors, let me know." And he was like, and that got me thinking, like, why did he say that? Right?
Yeah.
So he went to every floor and he's like, "What do you do? What do you do? What do you do?" Right? He's like, "I don't know what everyone does." And then he says to the CEO, like, "I'm gonna go to the factory. I'm gonna go like tour the factory." And the CEO's like, "No, you don't want to go. Don't go. Like, don't go." Right? He goes anyway, and he says to the factory guy, like, if I got rid of a bunch of those people, how much harder would that make your life? And he said, harder? That make my life easier.
Yeah.
Exactly, right? Because people just get in the way and they
Yeah.
slow you down. And he said he got rid of 80% of that company and he didn't get one single complaint.
Yeah.
He said, like, if a grocery store, like, think of a grocery store, if they got rid of 80% of their employees, the dirt would, like, it would be chaos.
Yeah.
But, like, literally, these office towers are full of people just getting in other people's way.
Yeah. And you yeah.
Your parole officer told me we're not supposed to be talking about the government.
Yeah, it's crazy, and you think of these SaaS companies too. I'm seeing people online, or like really people that have their own companies, and they're like, yeah, I could just build this company on the side in a week, and it works better. And any feature that I want to add, I don't have to team and wait 2 months to have this feature. I can just ask an agent and they'll do it for me and it's done. Yeah, I also heard that like people saying engineers have never been more productive, but also never more burnt. Because it's like, oh, like what do I do if I can do anything? Backlog. Yeah. Yeah.
That's what I'm doing.
Yeah.
And
But,
do you feel like
So
you're
wait,
making a difference?
Explain more.
like, there's a ton of these tickets or like these weird issues, especially for legacy system, and you can just send agents to go figure that out. Like, evaluate: is this still relevant? How would
Yeah.
you affect? How would you make a small change that would, amend it?
Yeah.
It's amazing.
Hmm.
It's great. I'm not burnt out yet, but it's definitely weird.
Yeah, I think the thing is if you're gonna start a company now, what do you go for? Like, what do you build? Even in crypto, I mean, crypto, anything like what do you build now? I don't know.
Well, you have to have like ideas that the market wants
Yeah.
first of all, right? And
Yeah.
just do it faster, better, with fewer, like you said, just leaner.
No,
I don't know. Expertise is still a premium,
that's true.
right? Like, I have tacit knowledge, or even if it's not generalizable, it's just about these legacy systems or what this is, how this is going on.
Yeah.
And I can codify that into a skill for an agent, but that might put me out of a job. So why would I do that?
Yeah.
So I'm incentivized to like gatekeep a little bit more. Like, there are lots of esoteric experts or like older people that they have an instinct for this field.
Yeah.
And I don't know, round those people up and curate access to them.
Yeah.
That's what I would say.
Yeah.
Domain expertise.
Do we?
It's like the cashiers at the Dollarama encouraging me and trying to get me to use the self checkout. I'm like, why would you work yourself out of a job? What that like? Are you thinking up there? Like, what's going on? Who wants the mic now?
Well, yeah, I was gonna say, do we have any other questions, like, or other things that we want to answer? If you had something that you wanted, did you have anything? We'll get John. John, go ahead, and then if you have some questions for us, because you're still saying you're kind of newer or fresher. If you had things we wanted to answer, but anyways, John, go ahead.
All right. Yeah. So Bitcoin and ETFs. So do you think it's a good thing or a bad thing overall? That the ETF
Paper
took
Bitcoin?
over? Yeah.
We think paper Bitcoin is awesome.
No, that's the
We
question.
love
What do you think
love paper Bitcoin?
of
Do
it?
we think that paper Bitcoin is awesome?
I don't, but
Yeah.
I just want to get your
Yeah, you
takes,
just
guys.
wanted to hear that
Because I think ETFs
you wanted to hear how much
is
we
gonna
love
be
paper
the Bitcoin killer.
That
So-
paper Bitcoin is the Bitcoin killer. Yes, it is. And
I think it's a transitionary period. Because, like, I don't know. Personally, we still live in the government, under the government, right? And you have investment accounts that are really nice, and people like to use these as well. So I would buy like paper Bitcoin through my investment account, and that way I get tax incentives and that kind of thing, right? But obviously, it's not the end goal. And does that shift everything over to paper Bitcoin? Hopefully not. Maybe. But I think that it's not all bad. Like, it's bad,
yeah, it's just.
but there are benefits for some people.
well, there's benefits, but those benefits come with trade-offs, and the trade-offs are. I wouldn't even say either of those, but I would say like it's a trade-offs, and you're basically saying, all right, I'm going to give up custody, and I'm then going to put it on layers of custody as well, because not only do you not own the ETF, like I don't have a. It's not like I can have the ETF as my token that's on my, on your wallet that you can control, right? You don't have access to that first and foremost, and then second, you've got it by some issuer that has, that you're apparently has some Bitcoin in it, and then they are custodying it as well. There are some other custodians doing it. So there's all these layers of like custody that are just adding up and just, ready for blowing up, is my opinion. So this is where what I would hope that we can do is that these things can start working their way on chain, and having there better ways for custody so that you could actually own and have your ETF in your wallet that you actually control and contain, and it's actually custodied by smart contracts, right? And then this somehow works and is compatible with our, old legacy dinosaur system. And somehow we can say, you know what, you have access to this, you can control it yourself, and because of that, you can get these tax benefits because the tax system is also built into, working with on-chain stuff. So I think that's where it needs to go to. And until then, personally, I'm like not that interested. Like, sure, I get it. It's like you've got tax benefits and I can do this because I have TradFi money. So I get that, but I don't know that like.
Don't put all your exposure into it.
It's just like we were talking at the very beginning of the I guess the very beginning of tonight, we were saying like with Coinbase, right? It's just Coinbase has whatever centralized exchange has your assets, they have your assets, and it's more likely than not. Yeah, it's more likely than not that they're just one day going to be you no longer have those. And I've been very fortunate. I've only had 4 centralized exchanges that have fucked me over. Just 4. Pretty good track record. Hoping to keep it there. So that's why I'm like I'm kind of like the, antichrist when it comes to centralized exchanges, to be honest. So you get in, you have basic deposit, get out. That's it. It's really, I look at them as on-ramps now. We have all the tooling you need now. Like if you want to go trade shitcoins, you can go do shitcoins wherever you want, right? That was one of the main reasons why you're like, oh, well, I wish they had this asset on these exchanges, so you had to go to that exchange to do it. And then if you wanted to trade, like back in the day, we had I remember trading on BitMEX, right? And it's like, well, I got to trade on BitMEX, or Bitfinex was the other one I was doing a lot too. And I always thought, like, what happens when they shut the doors and I don't have access to this? I want to trade, I want to be able to do get price exposure to things, but I have to do that in a custodial way. Now we have so many other ways to do this that there's really no need for there's no need for centralized exchanges to offer you what they're doing, right? Because you can just trade that on chain. And unless if you are looking at serious size, when you've got 50 million on a mobile phone and you're just going to slang that around and you're thinking, okay, I need to be able to get, better price exposure on, a certain asset that way. Yeah, there's a certain point where centralized exchanges make more sense before going to a straight up OTC deal versus like a DEX. So there's kind of like a few different tiers of, how much volume and liquidity you're looking for. But I'm going to say for most people here that are trying to maybe do anywhere from a $20 swap to a $50,000 swap, you're probably fine on a decentralized exchange. There's going to be enough liquidity for what you're looking for. And if not, chances are you're really out the risk curve with your shitcoin. So maybe, think twice about that one. So, I don't know. That's, come back on chain. Eventually, hopefully this heads that direction, and we'll see. I don't really see it happening in Canada anytime soon, but dare to dream. Yeah. Oh, one other thing too, I guess in regards to Canada policy, dreaming, all these other things, we did put out a tweet yesterday or today, was it, about Stand With Crypto? Yeah, this morning. So there's a petition that you can sign for Stand With Crypto to talk about, I think this one's for stablecoin legislation. So yeah, just you can sign up and say, hey, yes, I want this to be a part of the conversation. Read through it, make sure you understand what it is. Don't trust, verify. Right, that's the whole thing here. So make sure that you verify what you're actually signing. Even if it is just a petition. But yeah, check that out. And the more names that are on there, the better. Obviously, we want to see that there's some kind of progress here for crypto within Canada, because we're just cooked otherwise. There's a lot happening in the US around all this, and we're kind of looking to them, but some of that is, we'll see. It's a little bit messy right now. So in the US, but in Canada here, if we have some petitions that can help us, and if we can just be sorry enough, maybe that'll do it for us. So yeah, there's a tweet that we put out, so just check that on our Twitter, and then that link will take you to Stand With Crypto, and check it out, read it out, sign up. Put your name on there, or a pseudonym if that's what you like to run. If you don't want to, use your real name, but it's good to have good to sign what you're stand up for what you believe in. Cool. Did you have any burning questions before we wrap up?
Yeah, but my question is kind of like related to wallet. That's the topic before.
Sure,
Okay.
sure.
So now like MetaMask and Rabbit Wallet.
Rabbit,
They,
yes.
Yeah, they
MetaMask.
normally accept like you can connect it to your Ledger wallet, right? It's
Yeah,
like
sure.
directly, how to say? Like,
Yeah.
Yeah. So is that kind of like secured by the hardware wallet?
Yes.
Does that count as like?
Yeah.
Yes.
So the way a hardware wallet works is like with a hot wallet, you have your key that's text, and you can know that, paste that, and whatever, and kind of just floating around. On a hardware wallet, your key is on that device and not extractable. So when you normally sign a transaction with a hot wallet in Rabby or MetaMask or whatever, that happens in that application. With a hardware wallet, when you connect it to MetaMask or Rabby, that the extension sends it to your device signs it, and then sends the signed version back. So it is still secured by your hardware wallet, and your key cannot leave that hardware wallet.
And I think maybe one other thing to add into this in regards to the keys and whatnot, it really comes down to the key generation. So when you generate it on a hot wallet on your computer, the key has been generated there and has been exposed to everything on your computer and potentially exposed to the internet. Okay, and so that's where your private key, like the thing that you're actually going to sign with, that actually gives you the authentication to, the authority to sign and send things. Okay, on a hardware wallet, that's where you're generating all of that in this offline secure environment where you create your seed phrase, and that gives you all of these addresses within your wallet, right? It'll give you, there's a incredible amount of addresses that you can use within that. But those have all been created in this offline secure environment on your hardware wallet. Now, all your hardware wallet is doing when it connects to Rabby or to MetaMask or wherever, it's now saying, we're going to use, what interface do you want to use? Because the hardware wallet needs an interface, right? All it's doing is signing. It's basically the pen that signs the check is the way to think about it. So it needs an interface. And generally you'd have like the Ledger software wallet that comes with it, or interface. I mean, I don't use those things. I just like to use these, I use Rabby for the most part for interface is the way I like to think about it. And that's all it is you're now connecting the Rabby interface to your hardware wallet so that you can interact with it, right? But at the same time, you could use Rabby as a place to generate your key and to use and interact with that key that has been generated on your computer, which we're going to refer to as a hot wallet, right? As a hot key, hot wallet. Cold wallet, cold key that has been created in this offline environment on your hardware wallet, then has the ability to interact and interface with Rabby. And what's great is because Rabby works with MetaMask or whichever you're using, is really easy to integrate with applications that you're finding on the web. So for DeFi or for social stuff or whatever you're trying to do, right? So that's where you can log in and you're able to access your hardware wallet through that kind of flow. Does that help? The security level is the same provided that because there's never a time where, unless if you type your seed phrase in, never type your seed phrase into anything. That goes into your hardware wallet only, and that's it. And so as long as you're using that, there's still risks, right? So if you're connected to a phishing site, and then when you sign a message you sign a transaction that says, are you willing to drain all of these assets? It's not going to protect you because you're literally saying, yes, I would like you to take all of my assets from me. So you really need to know what you're signing still. So there's still that whole, that whole kind of element that you need to keep into account. But yes, the security as far as hey, this is how secure is this? If it's generated on a hardware wallet, if you never expose your private key, if you never expose your seed phrase, use it with and use it with these Web3 or these browser wallets and these browser extensions. Go ahead, but as soon as you put a private key or generate your private key within a hot wallet, or you paste a private key into your hot wallet on your desk, into your computer or your laptop or desktop or whatever that's in a browser, consider that compromised is the way to think about it, because chances are, that maybe that's on your clipboard, but there's been a virus that's like sitting in your computer that takes all your clipboard notes, and all of a sudden, oh, this looks like a private key, and somebody extracts that, puts it in, drains your account, done. Or you click on a link. Like I knew some people that one guy that got drained $50K or something like this, and he was just developing a game, and somebody said, oh, just check this development out here, check out this, like some GitHub link or something, clicked on it, before he knew it, drained. That's all it takes. So hardware wallets connected, like you were just saying, totally fine. Anything else? I kind of went on and on about that, but I'm really trying to hammer it home.
Yeah. Talking about security, I have an experience to share. Like 3 years ago, at that time, the GMX DEX is very popular. So I borrowed a lot of USDC to long in GLP at that time. I remember there's a 15 to 20% DPEG from USDC to USD. So I thought I can just repeat the USD at a DPEG level to repeat my GLP. There's a protocol called Sentiment built on the GMX. It's called GMX Lego. But for, I don't know why. I don't know the reason. I repaid the USDC, but without a DPEG discount. Yeah. I lost some serious money from that.
Oh, yeah. That's a serious DPEG. 15 to 20%, you said?
Well, that was like when it was Silicon Valley. I think when Silicon Valley was going on.
Yeah, no, that price matters that you borrow at. Yeah.
So I think in any suspicious scenario, you have to try a little bit amount of your money.
Yeah.
Those protocols, especially you are not tech background, right?
Yeah. Well, yeah, it's kind of similar to the Aave thing too, where if you're not familiar with how the things work, you really have to be due diligent.
Maybe they're hard coded the USDC to USD.
Yeah.
We're starting to see that happen now, like even actually with like Across's latest topic, where they're saying it's a little bit different, I guess, a little slightly different, but they're saying like when you transfer $1 to another chain, for example, or if you're gonna do some repayment stuff, I guess it's a little different, but like you should have $1 on the other side. You shouldn't lose some of it, right? The fact that like you send $1 and now I only have like 99.9 cents, like, or what the hell happened here, right? So you should always be, I'm moving this amount of value to somewhere else. Just like if I'm going to send you, well, I guess send is a little different, but when you're bridging across to a different network, like it should all be the same. And then if you're going to do repayments and stuff, to have that peg would be great. But yeah, again, this peg and the depegging side of it, like where that comes from and what that stems from is custody, because Silicon Valley Bank had the custody of the dollars, but suddenly there was no more money left. And that puts a big hole in the balance sheet, right? Saying that this stuff is only worth, because like it's only worth 80 cents now because 20 cents of it is missing because of Silicon Valley Bank. But that all came back and covered relatively quickly. But
should we wrap it up there?
Yeah. That should be good. But are you off GMX now? Yeah.
No.
Now where are you? Oh. Okay. Cool. Yeah. Perfect. All right. Happy to hear you've made the transition over.
Yeah, sure.
One more and then that's it. John.
Besides AI, what is the hottest narrative for crypto in general? Is it privacy? Is it interoperability? Is it what is it?
It's tough right now.
Privacy was hot. I think that kind of dropped off. I would say, even what you touched on here with like the 24-hour markets, I'm seeing that a lot too, where people are talking about it's weird. People are starting to talk about hyperliquid now because of these commodities markets that are trading 24/7. And especially with like these conflicts that have been going on, people are like, wait a sec, Trump likes to do things on a Friday. You know, and now there's like, oh, we can have exposure over the weekend while the shenanigans is going on, and then by Monday it's resolved, and then we're back to normal, and everybody's freaking out over the weekend. Well, guess what? Now you can do what you need to here. So I think that's a bigger narrative right now. Privacy, I'm not sure where we're at with that, but quantum, yeah. I just haven't been. I kind of like ignore quantum now because I'm just praying that it's far enough away. Up and coming, but I think AI is a bigger threat than quantum right now.
Inflation too. If you get inflation of the US dollar, if it starts to hyperinflate, then it's another store of value, crypto, right? But yeah, it's tough right now.
Stable coins and payments. That's what, people just have a lot of stable coins right now while the market is just flat and doing. But that's the AI and stuff too. Like they want to use, dollars to make payments. So I can see a lot of that stuff with dollars, right? And then as things get speculative again, maybe they're going to look and more sense for us to use, maybe some other asset that they can maybe is more valuable throughout all this, or they want to get rid of things at a certain time. I don't know. I don't know what the agents are going to do, but US dollars right now is what seems like a reasonable thing for them to do. Okay. Alrighty.
Well, thank you guys.
Yeah, thank you. And thanks to everybody at home. We're gonna try and keep on that, but yeah, we're gonna, like I say, we're gonna circulate this this form for decontrol as we move over to the next place. We'll have that a little more available. Just watch the Twitters and our Discords. We'll post all that on there, and yeah, hopefully within the next month and a bit, we're in a new spot and kind of targeting for a May 1st. Well, maybe middle of May or something, we'll be ready to rock and roll and be full force again, because it's going to take us a bit of time to get set up and transferred and moved over and everything. So yeah, and maybe looking for some other help too. So we may we'll have more ways to get involved and get help. So yeah, keep in touch with us, and yeah, that would be awesome. And then there's that Stand With Crypto thing too. If you want to sign the petition, check that out on our Twitter, ETH Vancouver, @ETH Vancouver. And you can sign that if you're interested as well. Okay, thanks for coming. Hang out for a bit.